Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to talk to you about a company called iFinance Limited. We are going to go through their recent results, the con call, and get the most important points. And before I get into that, right, I'll just take you briefly through what does the company does and how does it make money. So iFinance is an NBFC. They recently came with their IPO and where there is around close to 1,000 crores for expanding and growing their business. And if you look at their business, right, so they are very clear. They have a very clear focus. So they mainly focus on unorganized micro SME segment. And over here also they are very specific. They have a certain criteria. So they look for businesses which have a turnover of between around 30 lakhs to 1 crore and income around 5 lakh to 15 lakhs. So they're very, clear about what kind of customers or, the MSMEs that they want to target. And if in terms of the loans, if we see the type of loan that they provide, do this. So first is mortgage loans. Over here, generally what happens if an MSME is taking a loan, right? They will give their house as a mortgage, as a collateral. And that's what called mortgage loan. And if you look at their overall AUM, right, it is around 21.6%. And then they have this something called as secured hypothecation. Over here, what happens, right? Over here, the how to say the equipments or office equipments or factory equipments are given as a collateral. So the in case if the loan is in default, then they can sell those things and get the money back. So that is around close to around 39.8% of their overall asset under management. The last one is unsecured hypothecation. Very simply means it's an unsecured loan. So there is no collateral at the back of it, and the chances of if a person does not pay the loan back, turning into a bad loan is very high, and because the business can not recover, iFinance cannot recover anything from it. So these are the main thing. And if you look at their recent result, right, which was quite good for an NBFC, the Q4, the revenue increased by almost 29% to 528 crores. And PAT was up by almost 111% to 86 crores. And if you look at the whole year revenue, it grew by almost 24% to 1,815 crores. And PAT was up by almost 13% to 194 crores. And if we so these are the main numbers, right? And we clearly see, especially for the Q4, right? They got the operating leverage. And if you look for the whole year, it was not that good because the profit grew only by around 13%. So let's look at the financial matrix and, the asset under management and how things look at it. So if you look at their asset under management for the whole year, it grew by almost 26% to 7,044 crores. And if we divide this asset under management and the types of loan that they gave, so mortgage loan contribute to around 21.6%, secured hypothecation around close to 40%, unsecured hypothecation around 37%. And if you look from the disbursement, right? So disbursement is nothing, the amount of loan that the bank gives every quarter. For the whole year, it increased by almost 15% to close to around 5,169 crores. And their net interest income was up by almost 29% to 1,033 crores. And their pre-provisioning operating profit also grew by almost 28% to 584 crores. And if you look at the profitability metrics, right, where we look at the cost to income ratio, over here they had a challenge because if you look at the net interest margin, it came down from 15.3% to 14.6% from the last year. And if you look at the cost to income ratio, that increased to almost 53.8%, and the average yield was down to 22.2% from 23.7%. So over here, the management is very clear that last year was challenging, but things are getting better now. So obviously, because of that, the provisions slightly increased. Cost increased because obviously when things are not going well, NBFCs generally put a lot of money in terms of improving their collection efficiency. The cost also increased. So all those matters, and that's the reason why if you look at the overall year, right, they did not get operating leverage. But if you look only at the Q4, right, things are getting better and they got the operating leverage also. And if you look from the asset quality perspective, the GNPA increased slightly from 4.2 to 4.8%, and NNPA increased to 1.8% from 1.4%. Obviously, asset quality increasing is not a good sign, but the management is very clear that they are targeting to reduce this even further as things are getting better. And if you look at the return on asset, right, it was stable at around 2.8%, and ROE declined from 11.8% to 9.3%. And I'm not surprised by the decline in ROE because we clearly saw that the factors which contribute to the improvement of ROE were not that great because the net interest margin went down, cost to income ratio increased, and average yield was down. And the another thing that management told on the call, right, that in their business, right, they have a seasonality impact. So the first H1, right, of the year contributes to around 35 to 40% of the profitability, and the last two quarters, the H2, contributes to around 60 to 65% of the revenue. Over here, we can clearly look, right, from the management's commentary and everything. It was a challenging year, but things are getting better, and we can see from the numbers from Q4, and they are, planning to make things even better. So, because if you look from the guidance perspective, right, the management is very confident they can grow minimum between 25 to 30% of their asset under management, and they want to improve their net interest margin from 14.25 to 14.75%. And the target for ROE is almost like more than 50%. So currently it's 2.8. Their target is to increase it to 4 to 4.5%. And if you look at the AUM, right, from terms of mortgage loans, secured and unsecured loan, right, over there also they're targeting at a certain number, right? So they want to increase the mortgage loan from current 21% to around 30 to 35%. Secured loan, secured hypothecation around 40%. They have already achieved that target. And in terms of unsecured loan, right, they want to decrease it from around currently it's around 37% to around 25 to 30%. So this is what they are targeted. And if you look at these targets, right, this clearly shows that the management is clearly telling us indirectly, right, that things are getting better. The market situation is improving, and at the back of it, they are confident that from asset under management to from net interest margin to ROA, everything will improve. And if you look, they're also changing their product mix, right? So the company is planning to launch gold loans, two-wheeler loans, and small vehicle commercial loans, right? And obviously, the product mix will also help them to increase their overall yield and help them to diversify their overall exposure. So if you look in terms of iFinance, right, obviously they came recently with their IPO. Their Q4 number was quite good. And if you personally ask me, for a small company like iFinance to grow AUM at around 25 to 30% is quite decent and quite good, right? So it's and if they're able to grow that while maintaining their asset quality and trying to improve on it, that would be a great thing. But let's see how does the company does and how whether they're able to achieve these numbers, right? So whenever we are tracking any companies, right, whenever management any gives any guidance, right, is very, especially if you've invested in that company, it's very important, right, to write down the guidances, the guidance which the management gives, right? Because when we are following them in every other quarter, if the company releases a result every quarter or every half yearly, we can compare them and see where the company is heading, right? Is the management able to achieve the target? Is it close to the target? Is it missing the target? If it is missing the target, what was the reason? Whether it was a genuine reason or whether the company overpromised and under-delivered. If they are able to, overachieve it, it's a great sign. If they're able to achieve it, you know, it's good, not a problem. So that's the reason why it is very important, right? And I would encourage you guys, when you are tracking companies, when you're analyzing companies, and you're going through the management con call, look at the main things what the management is saying and promising, and keep a track of it to know whether the management is trustworthy. This is how we learn whether the management is trustworthy or not, right? What they are telling, are they doing it? And in case they are missing it, whether it's a genuine reason or they are just, talking, how to say, out of the thin air. So that is very important. And if you guys like this video and like this analysis, please do hit like and subscribe to my channel. Thank you and God bless you.